Good morning, everybody.
Morning.
Good morning.
All right, we're starting week 2. The agenda is to talk a little bit about the smartest guys in the room. And then we'll at least start into chapter 2 today and hopefully get to chapter 3 before the end of the week. And then at some point this week, I'll post a quiz on chapters 1 and 2 and then on Enron. So just as a FYI, most of the questions that you'll see on the quiz are ones that I've gone over in Kahoot or in the slides. So quizzes generally will be straightforward. So as long as you're showing up or watching the recordings, then the quizzes should be straightforward. There's also a discussion board question here this week. And I found some information on the role of the CPA 2025 plus. So I'd like you to look at some of the materials that have been posted. There was a task force that got together that talked about the existing core competencies that are needed and then the evolving role. So I think that would be helpful to you in terms of thinking about where things are going. So before we jump into a couple of Kahoot questions, I wanted to ask what people's impressions were about the documentary.
I felt that Enron it would have lasted longer if there was things put in place, like the auditing, making sure outside auditing agency will go in independently and check the work, because I felt like their ethics weren't put in place. It's like they want more, but their morals weren't in the right place. Yeah. They just wanted more, but not to do the work they needed to be doing in the right way.
Yeah, certainly one of the key things that we expect from the CPA industry is that they're going to make sure that management follows the rules or tell people if they're not. So what other impressions do people have from the documentary? How many of you were able to watch it?
I did.
Okay, so just share with us the general impressions. Is it worthwhile?
I knew what it was. I knew what Enron scandal was before watching it, but it was nice they really went into detail, so it was nice to watch it and learn more about it and about I didn't know about all the California stuff that went on, and like the blackouts and defunding or deregulating the electricity and things like that is really interesting to see how they manipulated it to make money.
Yeah. You know, one of the things I don't think it was covered in the documentary is that they almost beat Netflix to the punch because they had an agreement with Blockbuster about doing streaming.
Yeah, it was in there.
Okay, yeah. So, other impressions?
What stood out to me is when they were questioned about something and the only thing they said was California.
Yeah, cost the governor his job out there because people were disgusted with this rolling outages. All right, I'm going to ask you a few Kahoot questions on it. And again, this is more just to make sure that I've covered everything for the quiz. But you know, one of the big things that we learned from Enron is the importance of the checks and balances, and when they break down, it can be catastrophic. And you know, that was a massive American company that basically went out of business in days. And one of the big questions that remains is how did it go on for so long when we have all these checks and balances in place? We have the oldest and most established CPA firm in the United States in there reviewing their financial transactions, and they get co-opted. So it was a very disconcerting time for a lot of people, even beyond the Enron people directly impacted, such as employees and investors and creditors, because people said, well, if it happened there, it could certainly happen in other organizations. And so is it safe to do investing? So let's look at a few questions here. They were the seventh largest corporation in America. I don't know who the seventh largest is today, but I'm certain it's a brand name. It could be Facebook or Amazon or Tesla, but it's a big deal when something like this happens. So how many days did it take to go bankrupt?
Could you tell me the PIN number, please?
Sure. 513
513
37
37.
37.
Thank you.
Yeah, so it happened in a number of days. So it was, and usually bankruptcies take years. Usually a company first, people start to recognize there's a problem, then they go into Chapter 11, which is a reorganization, and if that doesn't work, they go into Chapter 7, and it can go on for years. We see companies do this all the time, and so it's kind of this long, slow, dragged out period. It's not a big surprise when it happens. This was like a shock, and they went right into Chapter 7, which is liquidation, within just over 3 weeks. And so people were lost, I think the estimate is about $50 billion between their savings, investments, pensions, etc. So it was a devastating economic impact to so many people. What was the accounting method they used? It's called mark-to-market accounting, which, by the way, is generally accepted accounting principles. And obviously, they took it to a new extreme, right? And they set up a lot of shell companies. They did a lot of things. And the thing about what they did was, if a CFO does that, we expect that the CPA firm and other regulators are going to say, hey, wait a second, you can't be doing this. But this went on year after year. And so what we recognize is that sometimes the CPA can get too close to management, right? We want them to be the referee on the field. We want them to go in and do the audit in a professional manner and to attest that management's complying with GAAP, and there's no material misstatements. And a big part of the problem was that they had co-opted Arthur Anderson, and Arthur Anderson was the oldest and most well-established CPA firm. And by the way, they employed thousands of people themselves that were immediately lost their jobs. Enron traders manipulated the energy market in the U.S. state by driving up. Okay, so we talked about this a little bit, right? So yeah, so they created havoc in California, all for profit, right? All to drive up their prices and drive up the price of energy. He became an informant and pleaded guilty to fraud and money laundering. He was released from prison in 2011. Yeah, so that's Andy Fastow. He was the CFO, and he probably was the architect of the scheme. Very smart guy, but obviously, if he had it to do over again, he wouldn't have done it. So now, believe it or not, he's a lecturer on corporate ethics, and I wanted to have him speak to one of my classes, but he's very expensive to bring in as a lecturer, so I opted not to do that. But the other characters there, Jeff Skillings is actually in the documentary. So this is before he ends up going to jail. And Ken Lay they have him in a couple of the settings too. He was the chairman of the board. He actually died before they went to trial, but Lay and Skillings tried to plead that they didn't know what was going on, that Andy Fastow was responsible, but clearly they knew. So what happened to the employees? Yeah, so the thing about corporate responsibility is, particularly when you're in a senior management role, is that you have responsibility to a lot of people, and we've oftentimes in the last 30 years drifted into a mindset among corporate executives that it's about them, as opposed to it's about that I'm in a position of privilege where I have responsibility to my key stakeholders, including my employees. Because if you think about the number of people, the 20,000 people who lost their jobs, a lot of them probably did lose their homes or went bankrupt and so forth. So it's a devastating impact when people are put in that position. Arthur Anderson, how much money were they receiving from every week from Enron? Yeah, so they were getting $50 million a year, or about $1 million a week. So that was a big reason why the CPA firm looked the other way. Right? Should they have known? Absolutely. Did they know? Almost definitely they knew. All right. So accounting firms make mistakes all the time. And when they make mistakes that is a result of negligence, they get sued and their insurance pays out. But when they make mistakes that they not only should have known about, but they did know about, then that's fraud. And fraud is criminal. And so Arthur Anderson was actually put out of business. So you don't hear about Arthur Anderson, which was the largest and probably the most highly respected CPA firm in the country, because of this one situation. Did all the people at Arthur Anderson know about it? Absolutely not. In fact, of the thousands of people who lost their job at Arthur Anderson, the vast majority had no idea this was going on. Did the other partners at Arthur Anderson know? We don't know. Some of them probably did. But in any case, and the interesting thing about how it gets uncovered is that the woman from the Fortune or Forbes magazine that kind of just does this, I'm going to call it naive, but kind of elementary investigation, kind of uncovers it and then unravels from there. So, you think about all the professional regulators and investors and creditors who were looking at those same transactions. Many of them knew what was going on, but they were taking the ride. They were making money, things were good, and they figured as long as they weren't the last one in, that they would continue to profit. So. The whistleblower at Enron. Yeah, so, the thing about being a whistleblower is that it's so difficult to do that. So here's a woman, she's got a fairly senior role at Enron. She's probably making a lot of money. She probably has stock options and bonuses, and all of a sudden she realizes that the company's built on a house of cards. And so she goes and she writes an email or drops a letter off with Ken Lay and says, hey, we've got a problem. And that's a really difficult decision to make, because almost always the person who does that is not, if they're doing it with people who know that there's fraud going on, they're almost always viewed as a threat. And generally they are either penalized or they're fired or something negative happens. So we do have, the federal government has set up a reward system for people to be a whistleblower. But that aside, it's a really difficult thing for somebody in the senior management position to do, as she did. So, okay, so let's take a look at chapter 2. So this is the role of the CPA. So, or the CPA profession. So as I mentioned, if you're thinking about a career in accounting, the CPA designation is clearly a gold star on your resume, and it's going to open a lot of doors. So not everybody wants to be a CPA, but I think that it's something that you should, if you haven't given it serious consideration, you should give it serious consideration, because those of you who have a degree in accounting, you're already part of the way there, right? Because one of the barriers to getting there is to have a certain amount of educational hours, and you've got a lot of them done by now. So I strongly encourage you to think about it and to consider it, because it certainly would be a plus, even if you don't want to work for a long period of time as a CPA, because most people who become CPAs do it for 3 or 4 years, and then they jump into industry. So what chapter 2 talks about is who the big CPA firms are, what they do. Then it talks about the Public Company Accounting Oversight Board that was created by the Sarbanes-Oxley Act in 2002, and how that's had an impact on the CPA profession. And a little bit about how the Securities Exchange Commission plays a role in regulating accounting and auditing profession. And then the AICPA. So when you think about the big institutions that play a role in the profession, we've got the AICPA. Now we have the PCAOB, which is relatively new, the Securities and Exchange Commission. And the other thing that's going on is this convergence with international accounting and auditing processes. So, and you'll see in that thing about 2025 and beyond, that's probably one of the big challenges that the US CPA is going to face is making sure that they're aware of the convergence and making sure that they're prepared for it. So, and then there's the whole issue about quality control within the accounting profession. So, I'm going to go through some Kahoot questions, but one of the things that I wanted to point out to you is the size of these firms. So the Big Four, as they're called, and this is just their U.S. revenue. So when you add in their total revenue is, for the most part, probably about twice as big as this. So, and this is in billions. So Deloitte, their U.S. revenue, and this was 2012, so it's a little bit dated. So today their total revenue is about $20 billion. So they're major operations. Pricewaterhouse about 15 billion, and the others are well over 10 billion, right? And then there's a bunch of regional and then local firms as well. So part of becoming a CPA is to go to work for a CPA firm for at least 2 years to get your license. But the other part is the educational requirement and passing the 4-part exam. So, okay, so let's go back to Kahoot. I'm going to ask you some questions and then flip back and forth between Kahoot and the slides. Yes, Christian. Eric, yeah, okay, watch out, man. What you gonna have? This act is considered to be the most important legislation affecting the auditing profession, really the auditing and accounting profession in 100 years. But it has the most dramatic impact on the CPA audit function. Okay, yeah, so it's Sarbanes-Oxley, right, past in the post-Enron era, right? So Enron comes along and the investors and creditors are really shaken up by it, so the federal government passed the Sarbanes-Oxley. The SEC, Securities and Exchange Commission Acts of 1933 and 1934 were probably the second most important after Sarbanes-Oxley, so. The Auditing Standards Board has revised most of its standards to converge with the international standards. Yeah, so this is kind of a subset of the AICPA, and they actually figure out what people should do when they're auditing, period, whether it's big company or small company. So these are kind of the standards, the protocols. And when you think about being a professional. In some professions, there are protocols and standards that you're expected to follow. And when you're doing something complex like auditing, whether it be a small company or a big company, you have to follow these standards and protocols to ensure that you've covered all the bases and done things properly. And usually, if a company gets into legal problems because of negligence, the first question they're going to ask is, did they follow the accepted standards and protocols? And if they didn't, then they're going to be held liable, at least civilly. So this Auditing Standards Board is the organization that does that. And there's a closer and closer convergence with international standards now. The responsibilities of audit under the principles underlying an audit of financial statements. Yeah, so all of these, right? We have to remain competent, right? We have to comply with relevant ethical requirements, and this is interesting, maintain professional skepticism, right? Which means that, it gets back to the issue of trust but verify. That's one of the roles of the auditor. The auditor does not assume that because somebody told me something that's true. I need to document, I need evidence to support it. The statement on auditing standards issued by the Auditing Standards Boards are regarded as the authoritative literature when it comes to auditing. Yeah, okay, so if we're looking for where do we find the standards? This is it, the statements on auditing standards as issued by the ASB. Generally accepted auditing standards serve as a broad guideline to auditors considering an audit engagement. Okay, so again, these are the basic things that auditors rely upon to ensure that they're complying with the professional standards that we're expected to comply with. Purpose of the SEC, Securities and Exchange Commission, provide investors with reliable information to make investment decisions. Yeah, so Securities and Exchange Commission was created in the post. So we have the 1929 stock market crash, which then creates the Great Depression. But the reason the stock market crashed in large part was because investors were speculating without any reliable information. So people would hear, hey, I'm making money on Apple computer. And other people say, well, how do I get into that? And so there was a lot of speculation, and companies were not required to provide audited financial statements or even much in terms of financial statements at all. And so one of the big corrections to ensure that people would have confidence in providing investment and loaning money to firms was to put some regulations in place. And so as you should know, or you will know, so the Securities and Exchange Commission regulates the financial markets, and they require companies who are publicly traded to issue certain documents on a regular basis. So every quarter, for example, I have to issue my basic financial statements. Those are called 10Qs. Every year I have to issue a more comprehensive annual statement that's audited by my CPA firm. That's called a 10K. That's my annual report. And then if something significant happens, I have to also alert investors and creditors, and I do that with a form called the 8K. So there's a series of things that the Securities Exchange Commission does to ensure that investors and creditors can make can make decisions. And so that's their main role. And they put together documents to help investors and creditors stay on top of key things. Okay, CPA must be continuing education requirements. Yeah, so every profession under their code of ethics is going to have competence as one of the criteria. And part of that is going to be continuing professional education. So every profession is going to require their members to continue to maintain and improve their knowledge and skills. Auditing standard of the is responsible for issuing pronouncements on auditing matters. So, I think that's pretty self-explanatory. I just want to make sure that it was something that you're aware of and we covered during our discussions. Who's responsible for establishing audit standards for privately held companies? Yeah, so that's the Auditing Standards Board. So they're the authority in the United States for all auditing standards, both large and small companies. Form must be filed with the SEC when a significant event that is of interest to public investors. So it's called an 8K. So an 8K has to be issued by a company when there's anything that is likely to influence the decisions of an investor or creditor. So change of auditors, senior manager leaves or joins the firm, anything. So if you're in doubt, then you want to provide your investors and creditors with the information that they need to make decisions that would influence could influence their decisions to either loan you money or to either invest or disinvest in your company. These other forms are also important as well. So you're probably familiar with the 10K and the 10Q. But if not, then you should become familiar with them, because this is the annual report. These are the quarterly reports that are issued as part of the ongoing reporting requirements of firms. And then there's some other forms as well, but these are the big ones right here. Yeah, so that's false, right? So it's the 8K, not the 10K. The 10K is the annual report. Okay, so if you're not familiar with these major forms of the SEC, you should become familiar with them, because these are part of what goes on in the accounting and auditing world on a regular basis. So the big ones are the 10Q, the 10K, the 8K, and then there's a whole plethora of other ones that you would have to research, and we're not going to cover it in this class, but no progress has been made on the definitions of what called audit quality indicators since SOX. Right, so there's constant progress being made. Okay, so the quality indicators are not cast in stone, and we learn things on a regular basis. So we should constantly be updating what they are and how to improve them. The PCAOB audit engagements continue to document high levels of audit deficiencies. Yes, so this is one thing that we have to keep in mind, that there are ways to improve all the time, right? And this is one of the roles of this organization, is to figure out how do we make things better, right? Not to assume that we've figured out all the problems, because continuous improvement is an essential part of any profession, including the audit profession. The Public Company Audit Oversight Board. Yeah, so the inspection of the quality control of firms that audit public companies. So they don't establish the auditing standards, right? That's that other committee we talked about. They're not involved with private companies. It's for public companies. Combines the most favorable attributes of a general corporation and a general partnership. So now we're going to talk about organizational structures. It applies to all firms, but we're really focused on the CPA industry right now. Yeah, so if you're not familiar with different organizational structures, then you should become familiar with them. So proprietorships, partnerships, general corporations have been around for a long period of time. More recently, in the last 15 or 20 years, there's something called the limited liability corporation, or LLCs. And this has become a very popular way for organizations, not just CPA firms, but other organizations to do business. Okay, so a proprietorship is just one person owns an organization. No, they're not incorporated, and that has some pluses and minuses. The pluses, you can start that today, and there are some pluses in terms of paperwork and so forth that go along with that. But the minus is that if you have a sole proprietorship and you're not incorporated, then your personal assets are at risk if you have a problem. And the same is true of partnership. So 2 or more of you decide you want to get together and start a business today or in the next couple of weeks. Pretty simple to do. There might be an agreement, there might not be an agreement. And there's certain things the law says about whether you have a written agreement or not, but again, your personal assets are not protected. So many people up until 15 or 20 years ago would file through a state charter for general incorporation. And general incorporation protects your personal assets, but it's also relatively expensive to start up. It also has the problem of double taxation, because in a general corporation, the corporate taxes, the corporate profits are taxed, but then distribution of dividends are also taxed. So what's come along in the last 15 or 20 years is the idea of called a limited liability corporation. So what this allows you to do is to basically incorporate and protect your personal assets, but not have the double taxation. Because what happens with a limited liability corporation is that the profits from the corporation each year are automatically dispersed to the people who own the limited liability corporation, or the partners in the case of a CPA firm. And those get reported on their individual income tax. So they pay taxes, but just one time. All right, so I think we're going to break at this point. We're going to pick up on this discussion on Wednesday at 11. Are there any questions at this point?
No.
Okay, well, thank you for being here, and I'll see you all on Wednesday.
Thank you.
See you on Wednesday. Thank you.
Yeah, well,
Thank you, Professor.